Hey everybody, it's Dustin with Kingdom Rich Tech. I wanted to kind of recap today's trade. Today's Tuesday, September 10th. I wanted to kind of go over the trade that we took. We took shorts on today. It was a quick scalp, quick in, and well, wasn't quick, but it was to the point. But I wanted to kind of show you how we took that trade, how we looked at the market, and break it down real quickly here for you, so you can get an idea of how we trade. So we're looking at first the micro NASDAQ, which is M&Q futures, and we're trading on futures. So we're looking at essentially the daily time frame. And so our aspect was, let's see what the market wants to do, not what we think it's going to do. And so first I wanted to kind of highlight what has happened over the last couple of days. And so what we saw was on Friday, we made a huge move to the downside, and then Monday turned up. So that was a turning point, literally. So what we did was highlight the Friday candle and Monday candle bottoms so that we can kind of get an idea of what was there. And what we did was make that a demand zone, so that price, what happens is every time we get down there, it will continue to buy, the expectation. When we come to the top side, we also have this support level here, which price actually showed us that it turned from that point. So now we have the top and the bottom of the current market on the daily time frame, and we'll mark that as a supply order block. So what we did, we saw market move down and then move down aggressively. What we call those displacements are fair value gaps. With a fair value gap, is essentially it leaves opening where price returns and balances the price. And so what we have is, to balance that price, we have to come back to those levels. And so we had one from last Tuesday, and then Friday actually displaced and made a fair value gap as well. And so we marked those levels so we can see what price wanted to do. And so now that we have the fair value gaps where price moved down aggressively, what we saw was price moved down on Friday and then kind of settled at 18,450 and pushed up on Monday and covered 50% of this move. So 50% of this move was covered. And then when we opened pre-market, we were already below. Now you can see this is today's candle, so it's already played out, but we were actually below the 50% level of this fair value gap and had not completely covered it or filled it as of yet, showing upward momentum. So we were in a decision period. So let's go down. We trade on the 5-minute time frame. So let me go down to that 5-minute time frame so that you can kind of see, and we'll use the replay tool so that you can kind of get an idea of how market played out today, in how we looked at taking that short that we profited on. So again, we trade the opening range breakout, which is called ORB for short, and we have this indicator, the ORB indicator we created on our website at kingdomrichtech.com/tradingview. So you can get it for free. It's available for you. Just click on it. It'll bring you to TradingView. You can download it and add it to your indicator. So what we saw, again, we marked that fair value gap on the daily time frame. And the idea was, when we put out our daily report that we put out daily for our those who are in our Discord, whether you're free or whether you are a student of ours, it's available to you, our daily analysis on the NASDAQ. But in our NASDAQ and our analysis, what we expected was, if price stayed below this 50%, roughly about 18,780, then we can see price move down. If we close below or pushed outside of this range, this fair value gap, that means that we've gotten all the sellers and the balance of price, and then we're going to move higher. We've had already covered on the daily time frame 50% of that move to the upside already, and so we were operating pretty high Friday's candle. So our mindset was, if we push below and push outside below the 50, we'll see sales come in. If we push up, then we'll see the buys come in, and then we'll be able to take those trades. And so we're going to wait for the ORB to tell us kind of what market wants to do. So ORB is the first 15 minutes of the market. So what we have is we're on a top 5-minute time frame trading micro NASDAQ futures, and what we have is going to draw the first 15 minutes of that market. And so what we got, the first 3 candles, 5 minutes, 10 minutes, 15, then it draws the low and it draws the high. And so we wait for price to clear that. Now in this case, if price breaks below, then we're seeing that we're staying below that 50% of that fair value gap, daily fair value gap, we're going to go lower. If we break outside of the ORB to the upside, then we fill the fair value, and our expectation is that we're going to go higher. So that's kind of how we're looking at this. And so we've had consolidation for well over an hour, and it never cleared the ORB until here, roughly about 9:10. And so this ORB draws at 8:45 Central, and then we waited all the way till 9:10. So a few more candles before we got the sell here, a lot of consolidation. So what we did, because again, my expectation was not, are we going to buy or we're going to sell, but my expectation is the ORB is going to show us what way we need to go by showing a strong price movement what we're looking for is that we got this breakout, but the expectation, again, price had already moved up 50% of Friday's move. So my expectation is if we do get to sell, we're going to sell, but we may not completely take these lows from Monday. So my expectation again was we may push down, try, and then push up, but we could push higher as well. So we essentially we took the trade here, and what we did was I waited for price to, I set a limit sell and not an actual sell market order. So essentially what that means is that I wanted price to come back to this level below and then continue my direction. It gives me more room to the upside. The reason I have also 150 ticks is because I want half of the risk to, first I want the market to move halfway of my risk. And then if it does not continue, I'm going to take out my trade. If it continues, if it doesn't reject once it hits my TP, then I'm going to hold it to the next level. But we have to wait for price to tell us what it's going to do. So we got the breakout, then we get the next candle. On the next candle, price pulls back, wicks us in, and rejects and just pushes just above the ORB. So we're in the market and we are waiting for it to move down to our take profit. We get another order sell, so we see that it definitely wants to try to go lower, but we don't have that confirmation until it breaks the lows, so we're waiting. So the next candle then pushes higher all the way up to the stop loss. Now, the reason we weren't stopped today is because we put our order at a return price of the ORB and not at the breakout. That's the only difference. But it did come back to the stops, but we were still in the trade because it didn't come all the way back to our stop, which is just outside of that range. So then the few next candles, we have a full pushback down, and we start consolidating inside of that daily fair value gap that we've been watching. We're still waiting. Market has not decided to make a move. It is consolidating, and it finally pushes out. And what happens is, as soon as it pushes out and snaps back, it's clear. I exit my full position because I don't see the definite move to the downside continuing. So I didn't want to hold and it pulls back just like this candle did. And so we hit our profit for the day, and we're done in the rest of the day. Now the market still eventually played in our direction. So we get that third sell on the ORB. And then eventually, as it rejected, it pushed back up like we thought, which we didn't want to be in, back again to the 50% and rejects off that fair value gap, the daily. So again, our mindset is if it continues to reject here, we're going to see it move down. If it breaks out, then we're going to see it move up. And so it keeps coming back to that level. And so it's not clear if it wants to break out or if it wants to the downside or to the upside. So we're out of the market already, but those who are still holding, if they had their stops higher, then essentially they were able to get that full 300 because the market eventually broke out, pushed down, and started hitting the larger top take profits. And as you see, it cleared all of these levels. And so all four of these eventually hit the 300 take profit, but we were already out of the market just because we didn't have the confidence to hold through. And then it continued to push. And so you could have a little greater than a 1-to-1 risk to reward, something like 1.2 or 1.3 to 1 on this trade. So that's essentially how we trade, how we approach the market today. We did hit our take profit, for our 150 on this trade. Eventually the market did push a little lower, rejected, and pushed higher. And so now we're back where we kind of just above where we started the day at, a large consolidation range. But that's how we trade every morning. We wait for the signal to tell us. We look at our daily analysis. We go down to the 5-minute, wait for the signals to kind of display what the market wants to do and indicate to us what it wants to do. And we follow that structure in that direction. Again, if you have any questions, definitely reach out, shoot us a DM. You can go to our website at kingdomrichtech.com. The indicator is on there at kingdomrichtech.com/tradingview or at TradingView tab, and you can get this access for free. If you have any questions or want to know more, definitely shoot us a DM. Definitely reach out to us on Instagram as well. All right, thanks so much. You have a good one.